Anna Porter, welcome to Property Insights. How are you going? All right?
Great, thanks.
Long time no see. We did not a speaking circuit, but we did a few sort of shows together around the place when in the early days of Yellow Brick Road.
We certainly did.
Seems like a million years ago now. And I don't think you'd even set up Suburbanite at that stage.
It was just starting out, so we were in our infancy back then,
Yeah, so Suburbanite's your real estate agency. It's a franchised model. You franchise out to other individuals, organisations or people, agents, and effectively you're a buyer's agent. So you're out there buying property for buyers.
Correct. We only work on the buyer's side, mostly with investors, occasionally homeowners as well, but mostly investors on the buying side. So we don't sell anything, and our team are all valuers by professions. That's sort of our background that we tap into.
Yeah, it's interesting. And the buy side of the transaction is... I often wonder on the buy side, do buyers need a buyer's agent more so in good times, which is 6 months ago and a couple of years prior to that, or do the buyers need an agent to represent them in the crappy times, which is, what I mean by crappy times is tougher times like we have now, and tougher for the vendor? When's it best to have when do you think a buyer's agent is probably most relevant?
I actually think a buyer's agent's most relevant depending on the individual if they're time poor. So people that don't have time to dedicate to the research, it doesn't matter whether the market's strong or weak, you can get it wrong if you're just not going to invest the time into it. So when it's weak, it's a bit easier for those that will invest the time because the market's not moving as quickly, there's not as much pressure. When it's really a hot market, even if you do want to put time into it, sometimes you just get pushed and pulled through that market so quickly you make mistakes. Yeah. So I think hot markets, it's critical, and soft markets, if you're just not putting the time in, you need that help. Or if you're in an area you don't know, if you're investing out of interstate or out of your area, very easy to get it wrong.
I remember when you launched your book, I don't know how long ago, it was a long time ago anyway, and you were talking about regional versus metro, investing in regional markets as opposed to metro markets, and you talked about the higher yields you get, rental yields I'm talking about, in regional markets compared to metro markets, and the reasons why, which all made sense. Then you talked about the lower capital gains in regional markets relative to the higher capital gains that you ordinarily would get in metro markets, which all made sense at the time. But of course, during the COVID period, everybody wanted to move regional. So we got is there a different view today on that sort of hypothesis? Because regional markets, forget about what's happening at the moment, but regional markets did quite well for both in rental yields and capital gains over the past 3 years.
Correct. They did well, but they didn't do as well as the capitals still. So when you look at your regional markets compared to your capitals, we've done a bit of analysis recently because, we get challenged on things, especially when you put in a book, you get challenged on it eventually. We wanted to look at how that actually worked in probably what's been the strongest regional market we've seen in over a decade. And we still saw most capital cities had double the growth in the same sort of state as what the regional areas did. So anyone that invested regionally has made money, but they would have made more if they'd looked at the capitals. So it's been good times, but you've still got to do that benchmarking if it's purely an investment decision.
Would you say that when you say regional markets, by the way, I guess you're talking about data and you're talking about national regional markets, but are there regional markets that did far better than other regional markets? In other words, did Orange do better than Ballina, or did Lismore do better than... Well, Lismore probably had a problem because of the floods, unfortunately, but Lismore didn't do so well for a whole lot of reasons, but did Ballina do better than, some region of Victoria? Because I don't know Victoria well, but how does that work?
Yeah, so what we saw is what I call a satellite city did really well, but in the data they're technically captured as regional markets.
So is that Newcastle?
Newcastle, Wollongong, Sunshine Coast come up in regional data.
Right.
But they've done really, really well. I usually categorise them as a satellite city because they have a major amount of infrastructure commonly. So, for example, Sunshine Coast had, at its peak in the last 12 months, nearly 30% growth, whereas Brisbane was a tick under that. So it actually performed better than its own capital. But if you're going further out to your areas, getting out around Ipswich and, those sorts of locations that I consider truly regional, they didn't do as well.
But did well nonetheless.
Yeah, if you've bought real estate in Australia in the last 2 years and you haven't made money, you've tried really hard to do it wrong.
Yeah, right.
Really
so
hard.
Is there a correlation, do you think, and it's a bit early to say because time will tell, but do you think there will be a correlation between those districts or regions, and I'm not talking, no, start again, those subunits of places in Australia that, say, someone like CoreLogic opens up. There's 3,085 CoreLogic subunits of areas in Australia. Is there a correlation between those sub-areas that did really well, for example, like Noosa, which grew extraordinarily? Is there a correlation between their growth and perhaps their fall from grace? In other words, the distance they've got to come back to becoming normalised?
Yeah, so we call those boom and bust markets. And even as a valuer back in the day when I was doing valuations, the banks would get us to comment on things like two-tier markets is what they call it. So it's a market that can be driven by interstate investors or interstate holiday makers, come in, push that market up, and the locals can't always support that growth. So It happened in Gold Coast units back in the day. Many people might remember that. And it's happening in pockets of Australia at the moment. And then what happens is when the market or economy softens a bit or interest rates rise, those holiday homes get sold, the investors will withdraw out of those markets, and there's not a stable enough local economy to keep driving that price point, and the locals can't keep up with the price point. So they will boom, but they can also have that bust effect, and it can be very volatile and a little bit speculative when you're jumping in. So we're starting to see that come through now, and I think that's going to, we can say, yeah, it's had great growth in 2 years in some regional areas, but if we're going to look at a 5-year period, we might not be able to say that it's done as well as other capitals that might plateau off as opposed to bust.
Yeah, and because one of the things that struck me is that in some of those regional areas, the locals have been priced out,
yes,
not only from buying but also from renting, because rents in Australia across the board have gone up by nearly 10%, 9.8% or something the last 12 months. It went up like 2.8% the last quarter. And there's a third shortage, so 30% shortage of supply of rental properties in Australia across the board. If I'm in a regional area and I was a renter and all of a sudden I can't rent anymore in that area, but I work close by, I can still probably go and rent somewhere 20, 30 minutes away. It's not a big a deal to travel, and I can go and rent somewhere which is much cheaper. But if all of a sudden all those people have left the rental market and they've settled down somewhere else, and they get used to that somewhere else, to go to the local pub, they relocate the kids in a school, blah, 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 all that sort of stuff. Is there a risk that those regional markets will suffer when the landlords are looking to release their property? I'll give you a good example. I was told a story about someone in Lennox Heads that had a property which she was renting out for, I think it was $500 a week, and was sometime last year put it up for release, and she had like 200 applications, and she put up to, on the advice of the agent, $750 a week. But I also heard from the agent that everybody's leaving Lennox. The old school locals are leaving Lennox and going, to other places which are cheaper. Then I thought to myself, well, what happens when that current lease expires, say now? Who's going to lease that joint? Is there a potential risk here?
Absolutely, there is. And Airbnb has also propped a lot of that up for a long time too. Yeah. So the alternative, which is, it's good that we have an alternative now. Airbnb wasn't so prevalent 5-10 years ago. So now a lot of people have utilised Airbnb platform to create a rental market for themselves in holidaymakers. But there's a couple of things people often don't realise. It's a proactive business you're running when you Airbnb a property.
You've got to clean the joint.
Yeah. And you've got people coming in at 10 o'clock at night messaging you saying, I'm lost, come find me. And I don't want to lose my superhost status. So I've got to go find them in the countryside at 10 p.m. and think, it's very proactive. And then you've got, once you get too many Airbnbs pop up, so if everyone starts to make that shift, you then push pricing down. It's supply and demand in that sector too. No barriers to entry, so you'll have this supply creeping up. At the same time, our borders are reopening. So not everyone's holidaying in Australia as much as they have in the last 2 years. So I think we're going to see it from both sides, and it's going to put a bit of pressure on those markets. I really do.
So there's a lot talked about at the moment about property prices, interest rates, affordability. Is there currently a dysfunction in the property market between vendors and buyers? That is, we don't have a willing buyer and a willing seller.
Oh, now you're getting all valuer on me.
Yeah. Well, because that's what it's about,
That
isn't it?
is, yes.
The valuation is based on a willing buyer and a willing seller.
Correct.
And if the buyer is only willing to pay $1 million, but the seller is thinking to himself or herself, look, I was told this place was going to get 1.2, or that's an expectation, so I'll take it off the market. So we then start to have, the data might be saying, 51% clearance rates at the auctions, but by the way, there might have been 50% withdrawn before the auction day even happened, or alternatively, of those that didn't sell at auction, they might have sold it after auction, 20 minutes later or a day or two later, which we don't get the data on in that specific sense. Is there a dysfunctional market for a little while whilst the market restructures itself? Are we in that category right now?
We're absolutely in that category. When the market moves and softens, it can happen quite quickly. And it can even happen in the time from you talk to the agent, I'm going to list and I'm going to tidy the house up. There's maybe a 4 to 6 week sort of preparation period to get that ready, to by the time you list. And a lot of people then are saying, well, my agent's overestimated the price. And I mean, that can be the case too, but it can also be the market. And I'm victim to this myself at the moment. So I went out and bought a house in an area that I've loved, paid for it, then had to figure out how I'm going to afford it. All the things I tell my clients not to do. Went home and said, honey, bought a house. I'm in so much trouble. I think I'm getting divorced. But then I went, okay, I've got investment properties and I'm going to sell one to pay for this property. We put one property on the market in Queensland and I'm across the market. We buy there actively. 2 weeks before I listed, we were one of, 40 or 50 groups going through properties to buy in these areas. We were one of dozens of offers coming in. By the time I listed 2, 3, 4 weeks later and had people coming in, we're getting 2 groups through the opens. And it's not even a pricing mechanism. We haven't put a price on it yet and we've just got no offers and no interest. And I could turn around and point the finger at the agent, but the agent's doing everything that she can to get interest. The market's softened. The buyers are nervous. The demand's fallen away. So my choice now is, do I just hold it a bit longer and figure out how I pay for this house, which we will. We've got other options. I wouldn't have done it without other options. Or do I just suddenly start dropping my price and put a low price on it to attract interest? And that's what will happen. Some people, some vendors will have to put that low price on things to attract interest if they are in a time crunch or a financial crunch. And that helps push the market down. And that's part of the problem that we're going to start to see.
So given your experience, particularly as a valuer, but when do you think vendors and buyers, in other words, price, demand and supply will intersect in terms of, demand and supply will intersect. In other words, we'll get a new price position on average, and then for every other property that gets sold. When do you think that's going to happen? How long do these settling in restructuring periods take? Do we have to wait till sometime next year? Do we have to wait till the interest rate rise cycle stops?
It's that one. It's when people feel that there's a stability come back. So when the Reserve Bank stops putting up interest rates month on month, even if they took pause for 1 month, people would say, okay, we have a moment here where this could be the end of this. And it's that knowing, the unknown right now is, are my mortgage repayments going to be $1,000 a week or $1,500 a week? There's an unknown. People like to feel like they know what's going to happen, even if they don't. Let's be honest, they don't. But it gives them that sense of security. And when we see that slow, that's when there'll be comfort come back to the market. And it really is just a moment of nervousness. But pricing can play into how that works. But we're also talking about, Sydney, your Brisbane's, things like that. Go to Adelaide right now and the market's still actively increasing. Same with Perth. In the last month, Perth and Adelaide still had price increases on average, according to your CoreLogic data. And what we see on the ground is a lot of activity from buyers, a lot of demand still. So not every market's being hit the same, but those markets have a huge amount of infrastructure and job creation that's still driving that, and they're quite affordable comparatively.